about the new kid on the block. That's an IPO that is hitting D Street. It's opening up for subscription today till 14th of July, and that is Smartworks Coworking Spaces. Now that is opened up for IPO. Let's take a look at what the company does first. Firstly, it is a business that is involved with developing and licensing office spaces. They operate in straight lease business model. The IPO has opened up for subscription from today, like I mentioned, till the 14th of July. The total, issue size is 582 crore rupees, out of which the fresh issue is for 445 crores and an offer for sale for 137 crores. But we are now joined by the management, Harsh Binani, who's the co-founder of Smartworks, and Neetish Sarda, who's the founder of Smartworks, joining us. Hi, gentlemen. Thank you so much for joining us today. Your IPO has opened up for subscription today. Firstly, take us through, what does your business look like? What is your business all about? What are your core operations, your business models? Take us through all of that.
No, thank you so much, Ankita. Smartworks is India's largest managed campus platform. We operate more than 10 million square foot spread across 15 cities with over 50 centers and more than 200,000 seats. Our focus is on mid to large enterprises that contribute to almost 88% of our revenue today. We are very humbled to have clients like Google, Ernst & Young, Persistent Systems, and Larsen & Toubro as some of our customers. In our campuses, we cater to the requirements of the new age employees. These employees don't just require desks, they require an ecosystem. Within their spaces, they want efficiency, amenities, and aspirational needs. We have gyms, creches, cafeterias, sports zones, and convenience stores designed within our campuses. All of this comes as a one-stop solution to our enterprises. Just imagine, for an enterprise today, taking an office, they have to deal with multiple hassles. First, they need to find a space, then they need to find a designer, they have to deal with multiple vendors to build out their office, and they have to deal with multiple service providers to take care of their day-to-day operations. Smartworks is a one-stop solution for them. In today's day and age, convenience is not a premium, it is a necessity. And Smartworks is the best experience that you can get.
Okay, thank you, Neetish, for giving us that overview of how Smartworks exactly functions. But Harsh, now coming to you, just want you to elaborate a little bit on how your business model is different, from others, and how it differentiates you from the other players in the flexible workspace segment.
No, absolutely. So, Smartworks is an execution machine. What sets us apart, what makes us unique, is our ability to take large individual buildings from non-institutional landlords, leverage our economies of scale to make sure that we reduce our capital expenditure as well as the operational expenditure. Today, our capex is only 1,350 rupees per square foot for building out offices. If you compare that to the industry, they are at 2,200 on an average. So significantly lower. Our focus is on mid to large enterprise clients where we want to become their office of choice. That's why in a segment which is growing so quickly, this industry has grown from 0 to 88 million square foot in the last 8 years. We've been able to grow 1.5 times faster than the industry average. The CAGR of the industry has been 22 to 23%. Smartworks has grown at 38% in the last 3 years.
That's interesting, but let me come to you about the entire IPO. As I can see, the total issue size is 582 crores, out of which fresh issue is for 445 crores, and there's an offer for sale for 137 odd crores. Talk to us about how do you plan to use the proceeds of the IPO, and what are the key considerations behind this decision of revising the IPO size, because even there's been a revision there as well, right?
No, thank you, Ankita and Kanishka, for having us here. We are raising 445 crores in primary capital to power our next leg of growth. Majority of this is actually going to go in shaping our next leg. And there is 114 crores of debt repayment that is also going to happen through these proceeds. The OFS component is very small as part of the larger issue. Today, Morgan Stanley states India is going to be the office to the world. Our Prime Minister Modi's vision is to make India a developed economy by 2047, when the economy is tipped to be at $30 trillion. You can just imagine what is going to be the need for modern workspaces and Smartworks is here to power the transformation and be one of the catalysts behind this big mega trend of need for larger office spaces. On your second question on why we've reduced the offer size, in the last 6 months, the company has scaled up and added more than 2 million square foot. Our largest minority investor, Government of Singapore backed Keppel Land, decided to reduce their offer for size. We took that as a cue of their long-term orientation towards the business. We reduced our OFS as well. And it demonstrates the need for less capital in the business, and therefore that's primarily why we've reduced the OFS as well as the primary issue.
Okay, point taken, Harsh. Now, I also wanted to understand something. Now, the company has been loss-making, it has been in a loss-making phase. So, possible for you to share when do you expect to achieve profitability and what are the steps that are being taken to achieve that?
Well, that's a great question. One of the largest real estate companies in the country, which has a 80-year-old legacy, today has an office rental revenue of more than 4,000 crore. Smartworks, in a span of 8 years, which includes 2 years of COVID, has been able to grow its trajectory to more than 1350 crores of rental revenue as of FY25. Our business model today is de-risk, insulated, and we are a cash flow driven business. So technically, the business is profitable. At the early stages of the business, we have to invest a lot to reach to a critical scale. Once that seeding is done, then this converts into an enormous source of profit. To give you a perspective in terms of our numbers, as of FY25, our cash profit in the business was 172 crores. We had the highest EBITDA growth of more than 3.5 times. This was against a revenue growth of less than 1.8 times that grew from 711 crores to 1370 crores. Like I stated before, the strength of the business is in its cash flows. Against an EBITDA of 172 crores, our cash flows from the business were 240 crores. And in fact, Kanishka, today, as per SEBI guidelines, because our business was operationally profitable for the last 3 years, our issue got changed from 6.2, which is for loss-making companies, to 6.1, which is for profitable companies. Yes, we are accounted by Deloitte, who's our auditor, and they follow an Ind AS accounting standard based on which there are accounting provisions that need to be created in our books of accounts. So for example, let's say we take a lease for 5 years where we need to pay 100 rupees every year for 5 years. In year 1, we need to create a provision of 120 rupees against actual cash outgo of 100. Next year it becomes 110. The year after it becomes 100. And in year 4 and 5, it becomes 90 and 80 respectively. Why I'm sharing that for our viewers here is it's important to understand that because of the Ind AS accounting, for a fast growing business like ours, because of the need to create these accounting provisions, our books of accounts from an audit point of view will reflect losses, but in reality, it is not. And on a go forward basis, as the business continues to scale, not only will our business profits grow, but the impact of the accounting profit will suddenly start to dilute as well, showing a very rapid trajectory on profitability.
Right, the point taken and interesting, as you mentioned, and when I see your numbers, I do see that you have been cash flow positive and you've been growing from a 409 odd crores in FY23, which sits at 863 crores in FY25 as far as being cash flow positive is concerned. And also, as you mentioned about the accounting of how it works. But tell me, going ahead, what are going to be the key levers for growth for your company, and what are the measures that you're putting in place to enhance investor confidence? I mean, of course, you've addressed one issue, but going ahead, how do you plan to enhance investor confidence?
Look, our company has had a very rapid trajectory of growth. Scaling up to 1 crore square foot in such a short period of time has been one of the hallmarks behind how we've scaled up and become the largest player in this segment. Today, when India is one of the largest market for flex space, Smartwork today is uniquely positioned to take advantage of all the headwinds and the mega trend of India being the office to the world. And particularly, if you look at the trajectory of the company, in the initial years after the promoter infusion of 100 crores, we got in the Madhukela family office to come in as an angel investor. Subsequently, we were able to get a strategic investor, which is Government of Singapore backed Keppel Land. Post that, we've had several family offices, right from Jagdish Master, Ananta Capital, Hexaware, who have all come in, we've created value, and they've also reinvested in the business. Today, where Smartwork is at a pivotal point in its IPO journey, if in such a short period of time we could scale up to 1 crore square foot, we know that this business is now going to grow by 4x in the next few years. And when the business achieves the critical mass, not only will our core business expand its margin, but at the same time, this business is a platform business. Over 2 lakh employees every day visit Smartworks. Whatever they consume, food, grocery, all of that will be monetized on a very strong backbone of our tech. So we are only at this point of time seeing unlimited potential and possibilities as we scale the business, and we have not even scratched the surface. We are less than 0.5% of India's commercial RE, which continues to grow.
All right, on that note, Harsh and Neetish, thank you so much for taking the time out and joining us and talking to us about your IPO.